Good day. Welcome to a new episode of HKEX Voice, our podcast featuring insights from senior executives and industry leaders on Hong Kong's financial markets. I'm your host, Jeffrey Ng. ETFs have been one of the fastest growing segments in HKEX's markets. And in 2022, momentum has continued to build with record daily turnover levels. Last year, we also added ETFs in our landmark Stock Connect program and further expanded our suite of ETF offerings. These new initiatives will set the stage for an exciting year ahead. Today, we are pleased to have with us Brian Roberts, HKEX's co-head of Equities product development and head of exchange-traded products. He will tell us more about the recent evolution of the ETP ecosystem and his thoughts for the market for 2023. Welcome back to our program, Brian.
Well, it's great to be back on The Voice. Thank you, Jeffrey.
So, Brian, we've seen sustained cash inflows to Hong Kong's ETP market for the last 3 years. And in 2022, ADT, the average daily volume, reached an all-time high of 12 billion Hong Kong dollars. Could you tell us a bit about the market's performance in 2022?
Yeah, thank you. Yeah, I mean, Hong Kong's ETF market really continues a very strong growth trajectory, and we're really going from strength to strength. One of the kind of key metrics that the Hong Kong ETF team is really acutely aware of, and the one that we focus on is the one that you were mentioning around net new assets or cash inflows coming in. Despite the weak kind of market performance that we saw in 2022, our ETF market was still buoyed by strong investor demand. They actually added $40 billion Hong Kong dollars worth of net new assets into our ETFs. And that really brought our 3-year total to over 160 billion Hong Kong dollars worth of net new assets. Now, we kind of start with that number, and that again, as I mentioned, we're always kind of acutely focused on that one because that's really what drives the overall business. And it's really an indicator of investor sentiment and the attractiveness of the Hong Kong ETF market. And overall, it's a very positive one, right? And so they continue to add more and more money into Hong Kong listed ETFs. With that new assets coming in, our AUM, assets under management for Hong Kong ETFs, has reached $380 billion. And as you mentioned, we've reached an all-time high in our average daily turnover, which is important for investors because this is their measure of liquidity, how quickly they can get in and out of positions. Sure. And we achieved a record high volume of over 12 billion Hong Kong dollars a day. So with all of this, we have really a lot of positive momentum moving forward. I think on top of that, ETF issuers are seeing this activity occurring and seeing more and more investors coming into our market. We saw 29 new ETFs list here in Hong Kong, and that increased our product diversity to over 170 ETFs, here in Hong Kong. And I'm also very pleased to say that we are Asia's first ETF market to offer Bitcoin futures and Ether future ETFs. I think the last thing I'll just kind of touch on that's kind of a non-number milestone, and you alluded to it in the question, is really the key milestone of the inclusion of ETFs in the really highly successful Stock Connect program that we have with mainland China, with Shenzhen and Shanghai Exchange. So this is also a very, very important development. I'm sure we'll talk more about it here in the podcast.
Indeed, a very robust year for 2022. Yep. Brian, what is driving investor demand for Hong Kong ETFs?
Yeah, so I think there's a few things that really come to mind. I think the first one is product diversity. I think this is really a major advantage for the Hong Kong ETF market and what we provide investors. And it's really a wide range of products. It's anything from your core asset allocation products that they can get access to thematics, fixed income, and now we have this really flourishing virtual asset ETF space as well. So I think that's the first thing, right? We are becoming and have become this really one-stop shop for ETF investors here. The second thing is investors are becoming more and more aware of the true cost of investing in ETFs. I think so one of the big educations that we've been doing over the years is it's really focusing on the holistic costs, or what we call total cost of ownership. And when you bring in all these different costs and you bring in the tax efficiency of ETFs, expense ratios, trading spreads, what you find is that Hong Kong is very, very competitive in a total cost perspective. And when it comes to the theme around trading Asia in Asia, we're the leaders in that. And so what we're starting to see is more and more investors within the region actually staying in the region and coming to Hong Kong and investing in exposures like China, HKEX Japan, Taiwan, these kind of exposures that, traditionally they may have gone to other markets, but they're now coming here to get those exposures. I think the last thing I'll just kind of mention here is that even in market downturns, what we're seeing is that ETF investors continue to increase their buying activities. So while everyone is selling, they're actually continuing to be net buyers into the market. Now, generally,
why is that?
Well, I think for them, right, ETF investors, they're generally a net buyer, right? Because these are more asset allocation type of investors. They're allocating money into these products to manage their cash flows and things like that. But I think also what they do is when they see market downturns, right, and everybody else is selling to raise cash, they're actually looking at this as a way to get access to the underlying assets, but at depressed prices. And then when market comes back up, they make a good return. So that's been one of the things that we consistently see. And that's not just true of Hong Kong. We see this globally with ETF investors.
That's fascinating. Brian, over the last year, have we seen any changes and developments in where investors are allocating their assets? And why are these new strategies being adopted?
Yeah. One of the bright spots that we really continue to see for investors when they're allocating to ETFs really continues to be thematic ETFs. Right. And, last year, thematic ETFs as a whole raised about 13 billion Hong Kong dollars worth of net new assets, bringing the total to be 50 billion Hong Kong dollars worth of assets under management. So it's representing a very healthy portion of our ETF industry today. But one of the, I would say, bright spots within the bright spot of thematics was Hang Seng Tech and just technology in general. But I'll talk specifically on the Hang Seng Tech ETFs. This was one of the leaders in net new assets within the thematic space. They raised over 14 billion Hong Kong dollars, despite Hang Seng Tech being down over 25% last year, right? And this kind of goes back to our earlier point that we were talking about. In these market downturns, ETF investors are net buyers, and they're buying into these ETFs to get those underlying assets at depressed prices.
Right.
The other one that we're continuing to see, and this is really following the global theme out there, and that is we're having a growing ESG lineup. We're seeing ETF issuers bring out new and innovative ESG types of strategies. We had our first carbon futures ETF, so now investors can now get access and invest into the carbon credit market. We had our first green bond ETF list, and that's providing exposure to the HKEX Japan green bond market. Mm-hmm. And then on top of that, we had a few more HSI ESG ETFs lists. But overall, ESG, we raised nearly $1 billion Hong Kong dollars worth of assets in these strategies. And I'm also thinking, or that we're also seeing, is that we're starting to see more and more regulatory frameworks here in Hong Kong and then just more broadly in Asia, really starting to focus on the importance of ESG investing. And we do think that in the kind of years to come, this will really be a catalyst for really accelerated growth. The last thing I'll just kind of mention in terms of where we're seeing investors kind of allocate is within this kind of broader theme of virtual assets. Mm-hmm. I mentioned we had the blockchain and the Ether ETFs list. That was towards the end of last year. But there's more to virtual assets than just that. We had our first blockchain ETF. We had the metaverse ETF list as well. And so this is really becoming a very kind of robust and very interesting space. And we're starting to see investors start to allocate towards this market.
So speaking of virtual assets, what has been the market's appetite for the crypto asset ETFs that have been launched recently, given the latest developments in the industry that we've seen?
Yeah, there's no doubt that 2022 was a challenging year for just the crypto space. But when you think about these crypto asset ETFs or virtual asset ETFs coming in, what really kind of strikes me is that these need to be under a more well-regulated environment. And I think that's the importance of bringing out futures-based Bitcoin and Ether ETFs, but bringing them out in Hong Kong, which has a reputation to be a strong regulatory regime. Mm-hmm. And we can bring these products out, offer them to investors, but do so in a very well-constructed, very disciplined, and well-regulated environment. So we did see the first ETFs of those list in December. We saw another Bitcoin ETF list just shortly thereafter. And I think the pipeline is going to be pretty robust for us.
That's certainly an area that we'll be watching quite closely this year. Yeah. Brian, 2022 was a defining year for HKEX's Connect franchise. We talked about Stock Connect earlier. Last year in 2022, we went live with the inclusion of ETFs in Connect. How is the trading momentum? How is that going 6 months after launch?
Yeah. I think the inclusion, first, it's the latest milestone in, a very successful Stock Connect program that we have with Shanghai and Shenzhen exchanges. And it's just the latest development in what has been a very quick and evolving journey for the Stock Connect program. I also think it's a very important milestone for ETFs, not just Hong Kong ETFs, but just ETF as a product structure as a whole, because it is the first non-stock financial product included in Stock Connect. And I think that really symbolizes, the well-regulated nature of them and really the importance of ETFs in the financial markets as a whole. Now that ETFs have been included, the reception we've had has been really good so far. Our turnover for southbound volume, which is mainland investors coming into the Hong Kong ETF market, consistently is growing month after month. We've reached recently, we're trading over $1 billion a day in southbound flow coming into Hong Kong ETFs. And this is equating to roughly about 9 to 10% of our total ETF volume. So it's significant. And I think when you look at that in just the short span of 6 months, this has been really good reception, really good traction. And again, it's systematic growth month over month. I think lastly, I'll just kind of touch on is not only is the volume for both northbound and southbound increasing, but we've also seen the continued expansion. Most recently, we added 15 ETFs northbound, so international investors will now have a broader selection of ETFs that they can access into the mainland market. And again, I think we're just going to continue to work with our exchange peers in mainland. We'll work with the regulators on both sides to continue to enhance and evolve ETFs as a product in Stock Connect.
So Brian, given the momentum that has been built up over the last few years, what is your outlook for Hong Kong's ETP market for 2023?
I'm optimistic on what the future holds for Hong Kong's ETF market. There's been a lot of work that not only us, but the entire ecosystem has really put into really building the Hong Kong ETF market into what it is today. And there's been a number of market structure changes that we have implemented over the years that's made our market more efficient to access liquidity and also just cheaper to access liquidity. Our trading spreads have compressed by 50% from where they were just 3 years ago. So I think this is a significant improvement. It just shows the efficiency and, again, the cost effectiveness of our ETF market. And also, I think we're continuing to see more and more new products come to market as well. And this is important because, we're building out a product lineup, or the ETF industry is, that's meeting the diverse needs of our investors across Asia. We're going to continue to make improvements where we need to remain competitive and globally competitive and continue to, bring out products that, meet investor needs.
That's great, Brian. I'm afraid that's all the time we have, but definitely lots of exciting developments in the ETF space to look forward to. Brian, thank you so much for joining us today.
Yeah, thank you, Jeffrey, for having me, and I look forward to joining you on a future podcast.
We'll look forward to it. For all our new listeners, if you want to learn more about this podcast or HKEX's markets, please visit us at our website at hkex.com.hk. From all of us at HKEX Voice, thank you for listening and keep an ear out for our next episode. So long.